Hey guys, what's going on? My name is James Mason. In this video, I'm gonna explain to you what is shorting, what to look for to short, and how to short, and how to figure out if you can short that stock or not. So I have the on-demand platform open, and if you are not familiar with on-demand, this is basically, it's paper trading, except you can actually go back in the market and back test anything you want. So, what is shorting? Shorting is basically you are borrowing shares from that broker. And what that means is your broker, they hold all these shares, and you're coming in and you're basically making a deal with them stating that you want to borrow these shares for this stock because you think that the price of this stock is it's gonna downtrend. And so how you make your money from shorting is, let's just say, for example, you buy a stock for $50. Well, not buy, you short a stock at $50 and it goes down to $40. You get the difference between $40 and $50. That's how you make your profit. Now, when you get to the point to where you want to get out of this trade, that's what they talk about, or that's what they mean when you hear people saying that the shorters are needing to cover, or they're covering. And what that means is they've gotten to a point to where they need to end this trade, and so they actually put in a purchase order for that amount of shares to basically just zero it out. So at that point they will be out of that trade, and whatever profit they made or loss is what they walk away with. Now, the danger to shorting is if you don't know what you're doing, you can actually end up owing your broker money. And what I mean by that is, if you are just trading normal, basically taking a long position, if you have $1,000 in your account and you put it in a trade going long, the worst that can happen is you lose that $1,000. So basically it goes down to zero. Now, with shorting, you come in here to short this stock at $31.60, and it just goes bad for you. The thing is, there's an infinite amount of numbers that this can go up, versus if you were in a long position again, that this can only go down $31.60. So what would happen though is your broker, it would basically trigger something in their system, and they would basically just lock your system down. You would end up getting a margin call, or whatever it may be. And well, actually it would be a margin call. It would really just depend actually how bad it just got before they shut your account down. Speaking of margin call, you actually have to have a margin account to be able to short. Now, Thinkorswim, this platform right here, they do have a lot of stocks that you can short, and it changes daily. And how you would find that out is if you were looking in some of your sell boxes usually up near the ticker symbol, you'll see this right here. HTB stands for hard to borrow. So this stock right here, really, I'm probably not even going to be able to come in and short this. There's, just not shares out there. Now, if you saw one that said ETB, that means easy to borrow, and so you could short those. And then you have the other one that says NTB, means none to borrow. But at some point you'll come across one that will say NTB, meaning none to borrow, and it's just what it means. There's no shares to borrow, meaning your broker is not going to let you borrow any of the shares. So E-Trade is actually better, they're better as a broker for stocks to have enough shares to borrow. So if shorting is like your main thing, E-Trade will probably be your best bet. And if you're into CFDs, contracts of difference, then you probably go through like TradeNet or something like that, and that's kind of a whole different thing. So anyways, now I'm going to show you what to look for when it comes to shorting a stock. So let's find one that we can short. Okay, can't do that one. Okay, so I guess when you actually go back into the on-demand system, I guess it doesn't actually keep up with if they are hard to borrow or not, just because it's paper trading and it really doesn't matter. So what we are looking for when it comes to a short, let me adjust some things so you will be able to see this picture better. Okay. So when the best time it is to short is if you're trading with EMA lines. Now this is my opinion, but if you're trading with EMA lines, it's the easiest way to basically figure out if you have the potential to short a stock or not. So I took away the two other EMA lines I use, and I kept the 9 bar and the 20 bar EMA line. And so right here where you start to see this blue EMA line pinching down and getting closer to the gold one, and right before they cross over, that's actually the best time to short. So as these two come in together like that, you will always see like this big red candlestick, and then you'll see that downtrend. And as you can see right here, it tries to fight it and come back up, but then the bears have taken over at this point and it's just going down. So if you came in and you shorted, we'll just say basically, we'll say right here at this point. And as long as it didn't reverse on you, and you held it to right here. Now, being that this is Tesla, you're not really gonna be able to make trades if you're looking at percentages. You have to basically look at dollars. So right here, you would have made $1 per share shorting Tesla at this moment. So if you don't know how to short, you definitely do not need to short a lot of these stock guru teachers who are, all about shorting and everything. All these people that have you pay these memberships and whatnot. That's, a lot of them, that's how they try to win you. Talking about all the money that you can make in shorting, and I'll give it to them. They are right about that. You can make a ton of money shorting. But shorting is not for the new investor. You need to know how to trade, and you need to know how to be profitable trading normal. So, if you are going to start learning how to short, you need to do it paper trading. That is the only way. Now, you'll see some of these other people. Let's see. Let me find a different stock. Now, you'll see some of these other people who basically, they'll see it push up, somewhere like right in here, and they basically try to short the top. Now, I'm not gonna lie, I have done that before, and it's worked out. It actually, well, the times it worked out great. But then there are the times that it didn't work out. And you better have some risk management in place, ready to use it. Because you might start, seeing this little dip, or, thinking that you're gonna, short it right here, and you'll see this little dip, and this is just a span of 3 minutes, and then, man, it just starts ripping up. And so at this point, like, if you would have started right here, I mean, you would have been 33 cents per share in the hole. And if you would have had 1,000 shares, you'd have been $330 in the hole, and it would have been bad. So shorting at the top here, like, I'm not even going to say it takes skill. It's not skill. It's really just luck. I don't care what anybody says. It's luck. Because this next candlestick, if you look right here, if someone did try to short, Well, if they would have shorted it right here saying, okay, yeah, this is the top, well, you know, I mean, you don't know if this is the top. But, you know, if hindsight is always 20/20. So looking back right here at this candlestick, you know, someone would say that is a doji. Well, yeah, no crap. And, you know, that just shows indecisiveness and yeah, it's going to end up downtrending. Well, yeah, because hindsight is 20/20. But in this moment right here, with the people that try to short the very top, I mean, it doesn't always work out. You know, let's just say someone, you know, saw this candlestick run up right here and they decided to, you know, short that, you know, thinking that it was going to start downtrending. Well, they jumped in right here, and yeah, if it went down, they would have made a decent amount as long as it stopped right there or kept going down. But this is all 1 minute right here. It went down and then it went right back up. So trying to short at the top, it's borderline stupid, honestly. So going back to what I was saying, you know, these lines getting closer. If you look right here, you know, the lines push down. They're pretty daggone close. So if you would have came in and shorted right here, well, then it goes back up. Well, you continue to watch it, and right here is actually where the lines cross over. And like I was saying a couple minutes ago, when they cross over, huge candlestick, red candlestick. So they cross over, you start shorting, and you can take it down right there. And on this stock for GM, that would have been 41 cents per share. So there actually is a lot of money to make in shorting stocks. It's just you need to know how to trade first before you short. So we'll go back. This is, let's see, 8:56, and we'll just watch this one play out just so you guys can actually see. Alright, so we're going to change our time back to here to that candlestick where these two lines actually cross over so you can actually see what it looks like. And you can see how quickly that red body candlestick develops. And right here, how that candlestick started off as green. That's just a lot of people who honestly don't know how to trade. You know, they were placing orders. And so they bought in, and of course it's red now. So that is how you short. And like I was showing you over here, that's how you can know if you can actually short that stock or not. And E-Trade, honestly, they're a better platform for shorting. They have a lot more shares to borrow, and if that's the route that you want to go, is shorting, I highly recommend you learn normal trading first. But if you're decent at trading, then E-Trade will probably be your best bet. So for each trade you'll need, I think it's $2,000 to be able to get a margin account. So, just check on their website. It should tell you all the information. And, you saw how those two lines, they cross over, and that's the best time to actually short. And you saw what it looks like when those start dropping. So right here, I will actually show you how to short. Now, being that this is paper trading, this is not going to matter. So this is just to show you actually how to short. So we'll change the quantity to, we'll just say 100. Now to short a stock, it's just as simple as clicking the sell. Now normally you would click buy, but to short you click sell because we're actually borrowing the stocks. And confirm. Okay. It said, we just shorted 100 shares right there. It shows you you're short of 100. And let's see. So as the price dropped, now we have a profit. So now we want to cover and claim our profits. So to cover, you'll click buy and confirm, send it. So it actually covered at the same price that we got in at. So we'll do that one more time just to show you just a little difference in it. Okay. Now I'm going to cover. Alright. So as you saw right here, it says minus of $3. So I lost $3, meaning the price had started going back up. The price actually went up higher than the price that I actually started shorting at. So that's how you make a short, and you always have to cover, meaning you always have to go and buy those shares. And when you short, again, let's just say 100 shares or however many, it will say right there what your short position is. You have to cover that many, meaning you have to make a buy to zero that out. So that pretty much concludes this video on shorting and what you need to know about it. Definitely paper trade with this, because shorting, it's a dangerous game if you don't know how to trade. It's not something that you need to do when you are learning. You need to learn how to trade normal, and you need to understand completely how shorting works. So I appreciate you taking your time to watch this video. Please subscribe to my channel. Please give me a thumbs up, and I will see you in the next one.